Whether it's beef cattle or dairy cattle, all cattle need water. Ritchie brings you fresh water on demand. Ritchie, proud to be a partner to the American cattleman since 1921.
Hello, I'm Marcus Brix with the CattleFax Closing Bell, brought to you by Ritchie Watering Systems. Since August 10th, the spot live cattle futures contract has lost roughly 5% of its value. The Kansas cash cattle market traded at $150 per hundredweight that week and expected to trade somewhere between $144 and $147 this week. With no significant changes to the supply side of the equation, the reason for market pressure must be on outside forces. Currency devaluation in foreign markets, combined with the potential for a Fed interest rate increase in September, has put pressure on the global marketplace. The evidence is clear in the open interest data provided by the Commodity Futures Trading Commission. It's a well-known process that as risk increases in outside markets, investors tend to seek less risky positions in more stable assets. Risk and volatility has been a mainstay of commodity markets in the last decade. Most recently, overproduction of energy and metals on the global scale has severely depressed commodity prices. With the lack of bullish news and money flowing from the asset class, commodity indexes are now trading beneath recession lows. The Bloomberg Commodity Index traded at a low of 101.5 on March 3, 2009, down from a peak value of 238 on July 2, 2008. Earlier this week, the index set a new low of 85.8, roughly 15% lower than in 2009. Live cattle markets were bolstered last year by tight supplies, keeping non-commercial side investment interested, but that money has partially evaporated. Since July 1st, the non-commercial net long position in live cattle has went from a strong 26% to a much weaker 6% as of August 18th. In terms of contracts, that's more than 52,000 net longs that have been closed out, helping to pressure the cattle markets lower. With China and Hong Kong entering bear stock markets this week, the market has grown worried that we have entered a 1998-style Asian crisis. Monthly fed cattle prices in 1998 were on average 7% lower than in 1997. Rest assured, the 1998 crisis had a very different setup compared to today. The U.S. has less financial exposure to Asian markets today than in 98, and Asian countries today have much less debt held in foreign currencies. Following Monday's sell-off, U.S. equities have already started to rebuild. Expect live cattle as well as commodities in general to meet upward resistance as the global market begins its recovery. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.